Welcome back to this episode of the Crypto Fat Cat and the Crypto Skeptic. Mr. Jonathan Levy is here with us today. Jonathan, bring us up to speed with what's happening in the crypto world.
Well, today was day 2 of the Ethereum ETFs having launched. And it's very exciting for those of us in the crypto world because it's one more layer of legitimacy. It's another opportunity for people who have struggled to buy these assets or don't really know how to or how to store them or anything like that. It's an easy thing to do with an ETF. You just go into your stock app and buy it. Just click on it and you buy it just like a stock, and it works the same as a stock from your point of view. So that's really great. And the Ethereum ETF had it was described as an epic day. The first day, it did over 100 million in inflows into over $1 billion in volume, which compared to the Bitcoin launch is much smaller, like between 10 to 20% of the first day Bitcoin numbers. But Bitcoin did have the best first day of any ETF ever. So maybe it's a little unfair to compare it to Bitcoin or to be disappointed by this. I think these numbers are really great, and it's just one more reason why I'm extremely bullish on Ethereum going forward.
What are the other reasons?
Well, it's going to be if it isn't already, the currency of the internet. Decentralized finance essentially runs on Ethereum. Many things are being built on Ethereum. Visa, MasterCard are starting to build on Ethereum. All the real principles of Web3, which is like decentralization and trustlessness, those kinds of things really live in smart contracts and Ethereum. I mean, they live in other places too, things that have copied Ethereum, but Ethereum is really where a lot of this has found itself. So much is built on it already. So much more is being built on it. It does seem like, there may be a lot of stars in the sky, but there's only one sun. You know what I mean? And this is the sun. Ethereum's the sun. Bitcoin's the father. Holy Ghost. Yeah.
So Bitcoin is the store of value. It seems to have kind of established itself as, somewhat legitimate, certainly in the financial world, now that it is a big ETF, and it seems like a lot of the major players are kind of incorporating it in their financial plans. So what way is Ethereum different? So it's all about this Web3, whereas Bitcoin doesn't sound like that Web3 is as important to it.
I mean, Bitcoin is Web3 as well, right? Bitcoin is about sovereignty of your money, which is very Web3. Permissionlessness, so you can send your money to anyone, anywhere in the world without anyone else being able to stop you or you having to ask for it. You being able to self-bank, which is the sovereignty piece. That kind of stuff. So Bitcoin's already doing that, but Ethereum takes it much further, where you can do exchanges, where trustless exchanges. So instead of buying something and you hope, you buy something and on Amazon, and when you get it, you open it up and you hope it's the thing that they said it was going to be. Now, Amazon's got really good return policies, don't get me wrong, but you're not always sure it's exactly what you thought, and sometimes you're kind of disappointed. With asset transfers on Ethereum, you get exactly what you were expecting always. It's verified, and no one can counterfeit it, and no one can take your money and not pay you. Whatever you're supposed to get back, the assets you're supposed to get back, that's all done all at the same time, algorithmically, locked in code, so everyone is protected, everyone's safe. This is the commerce of the future, except we're living today, baby. It's happening now. Jetpacks.
Okay. So have you done this? Have you personally experienced this with Ethereum, where you've been in some type of contract like this, where, you've got to participate in this type of Web3 type of contract?
I do it probably on average 4 to 5 times a day, I would say, for the last 4 years. Sometimes a lot more, sometimes only once a day, sometimes I guess 0. It must happen once in a while where it's literally 0, but very rarely. So yeah, it's extremely common for me. It's how I purchase all my crypto. It's how I trade all my crypto. It's how I do a bunch of other things too. So yeah, it's absolutely something that I'm doing regularly.
Can you walk me through a common example of that? Because I've never experienced that.
Sure. It's pretty basic, really, from the user point of view. So let's say you have some Ethereum and you decide, hey, you know what I really want is I want some other digital asset. I want to buy an NFT, which is basically like tickets to the next Taylor Swift concert. And I'm going to buy the NFT, and that will digitally represent the tickets, which then I can go and show at the Taylor Swift concert and be let in, right? They're not really doing that yet at Taylor Swift concerts, to be clear, but you can do that in certain places with NFTs already. And this is all coming. So you just enter, you say what you want to get, and you hit the button, and it tells you how much it's going to cost, and it moves it all, and you get your NFT the same moment that the other side gets paid. And you only get the NFT if it's actually the NFT that it's supposed to be. So the other side can't cheat you out of something here, which is different than what we're used to, right? Like how many people buy fake Super Bowl tickets and over the last 50 years? Like it's a common thing that's always an issue. If this was done digitally through smart contracts, that couldn't happen. That'd be impossible, basically.
Okay, so the Taylor Swift example is hypothetical. What's like a real world example of some type of a trade that you make where you use Ethereum and you use a smart contract, and it illustrates that this is sort of the main currency, the central currency of the Web3 environment.
Well, I don't know that this is going to illustrate the last part there, but an example would be, so one of the things I do is I get yield on my digital assets. So I lend my digital assets, or I what's called stake my digital assets, which helps secure the network, be it the Ethereum network or other networks. And then when you do that, you get paid for doing that. You get rewarded. And you get rewarded often in a coin or an asset that does not excite you, that you do not want to hold, right? Because you don't think it's going to have value in the future, or you'd rather have it just be in another asset, right? Someone gives you dollars, but you'd prefer to have gold. You can buy gold at a store or something like that. I mean, at a store, who's selling gold? But like online or something, you can try and find gold. You can do it. It's out there for sure. This can all be done basically instantly. Yeah.
So this type of staking, it's a little bit like if I went to my bank, or if I went to like a Vanguard or Fidelity and I said, I want to buy a CD. I want to take my money. I want to give it to you for 3 months or 6 months or whatever, and you're going to give me 5%. And, here's my certificate for that, or here's my online digital thing for that. It's similar to that, but just on smaller time frames.
It's similar to that, except there's no time frame usually. Well, it depends on the asset and the situation, but often there's no time frame. And it's locked in a smart contract, which means you don't actually have to trust the other party to pay you back. Because even you right now, when you give money into a CD, you're actually trusting that Fidelity is going to pay you. And usually Fidelity does, of course, right? Otherwise, Fidelity couldn't exist right now. But in human history, it has happened many, many times where suddenly those entities don't pay out when they're supposed to. There's a run on the banks, right? And suddenly the banks don't pay out because they actually don't have all the money that they're supposed to have. They don't have all the deposit money. That's not the way it works, right? They do rehypothecation and send that money out, and it's a whole mess. With smart contracts, it's different. With smart contracts, I am guaranteed to be able to get my money back at any time. It's locked in. Like, no, it can't be taken and used for something else. I'm protected that way. So I don't have to worry about who is on the other side of this agreement necessarily. As long as the smart contract is sound, I'm safe.
Let me ask you, is that the main reason why you are involved in these Ethereum smart contracts for other tokens? Like, you're a smart guy, you're a wealthy guy, successful guy. You could put your money into a CD that's paying you 5% from Vanguard or from your local bank. Why not do that? Is it actually that there's the guarantee in the smart contract that you're going to get the money back, or is it another reason?
Oh, it's definitely another reason. Like, I'm not worried about Fidelity paying me, to be clear, even though I'm talking about it as it's an issue. I think it is an issue depending on where you are in the world, your government, the banking situation. I think it's always a little bit of an issue anywhere you are in the world. Even I'm in the United States and banking with places like Fidelity. But I do feel very comfortable having my money in a place like Fidelity, to be clear. I'm not guaranteed safety. That's not why I do it. I do it because the yields are much, much higher. I do so much better than I would do in a 5% CD, which is like a 5% CD. No one can believe it's that high. We're all freaking out. But 5% on dollars on and this Web3 is like a joke. Like that's so tiny. It's laughable. Like no one would do that. Like I would say a typical APR for these days for dollars, which are really stable coins, but digital assets that represent dollars 1-to-1, is about 14 to 15% is probably about right. Like it's not hard to find that level of yield. Certainly more over 10%, like all the time, except in really dark dog days of the bear market.
Okay.
So that's
so you
what
do
I'm
it
doing.
for
I'm doing
yield.
it for the money.
So,
Yeah, I'm doing it for the money.
okay. So traditionally, the higher the yield, the higher the risk. And those generally married together. So what is the higher risk that's involved that is allowing or that is incentivizing them to pay you more to give them your money for a period of time?
Well, there's different kinds of risks. So first of all, like I'm talking about yields that are actually much lower than some of the other kind of yields that you can even find out in Web3. I think those yields are too high and are dangerous as a result. I actually agree with you. The higher the yield, the higher the risk. But to me, like 14% on dollars isn't that high. Like to me, 60% on dollars is like disturbingly high. And I wonder how that's possible. And then I look really closely at it and I usually figure out why it's that high. And I choose not to put my money there. Right. So it's also relative to the industry. So this industry right now is able to lend out these things or pay these APRs at these rates. I think partially because the whole world hasn't discovered it yet. So they're trying to incentivize people to participate. And so there's all these different kinds of incentive programs. These different blockchains will have a thing where they give away millions of dollars of their coin to different apps within their blockchain, different protocols. And those protocols will then make that basically bonuses if you use their protocol. So you get paid an extra 7% in this blockchain's coin on top of what the yield you're already making for the next 3 months, because everybody wants you here and it's free to print up that coin by the blockchain. It doesn't cost them anything. That's part of their marketing expenses, which is free anyway. They're just like, we give away 20% of our treasury for this kind of a thing. That was the plan the whole time. And so then it draws people like me to that blockchain and to those apps and protocols. And then we use them and, we generate value locked on the chain, and that generates, value for me, and people like me are hunting this kind of yield though. So we're like looking around and seeing what if there's a better one all the time, of course, too, because there are many, many blockchains and many, many opportunities for people to incentivize me.
Okay. So, you are you're in the sort of the granddaddy level of people who've been in the crypto world for a long time, almost from the beginning, right? In the early years. What would you say though to like investors who are just getting started now, who have seen this Ethereum ETF or saw the Bitcoin ETF that happened last year and are like, okay, maybe it's time for me to get some crypto in my portfolio. They don't know much about it. What steps would you suggest they take?
I mean, I think the ETFs are a great way to get involved. They're safe and easy. They're sort of unfuck-upable, which I like. Doing the kind of self-storage stuff that I do and other like serious crypto people do, you can absolutely screw up. And if you're not really confident with it, you can, a lot of people will buy the hardware wallets, but then never use it because they're a little intimidated by the technology. So if someone wants to do that, I encourage them to. But most people don't want to do that. Most people want to keep their money in a bank or in the normal stock market apps that they use or wherever else. And so this is a really easy way to get involved is with one of the ETFs, the Bitcoin ETFs. You can take on a small allocation of these assets that have extremely high upside, relatively low downside. I mean, they can go, obviously, I guess they have high downside because they can go to zero. So maybe relatively low is an incorrect way to say it. But let me say it differently. It's an asymmetric bet that you get to make on crypto, much more so than you do normal stocks, where like a good year for Netflix is if Netflix goes up 20%, that is a knockout, unbelievable year for Netflix. If Bitcoin goes up 20%, nobody bats an eye and no one thinks anything of it. If Bitcoin triples, people are like, hey, it was a great year. There's still that level of upside for these kinds of assets ultimately. And so I think it's really important for people to at least consider owning a small allocation as part of their portfolio. Not a big allocation necessarily. Not everyone has to be like me, but 1%, 2% of your portfolio, where it's not a big deal if it doesn't work out, but if it has outsized appreciation, which is normally what happens if you look at the history of these assets, that's all that's happened basically. You get to really benefit from that and, get richer as a result. And who doesn't like that? I think everyone likes that.
Okay, so anybody though who's investing in an ETF, it's like simply speculating in the price of Ethereum is going to go up, the price of Bitcoin is going to go up, right? They're not involved in any of the staking or any of the using of the Ethereum on the Web3. Right. It's just like, I'm going to buy some of these, or the fund is going to buy some for me, hold them, and I'm just going to cross my fingers that these keep going up like they have historically.
Yeah, that's right. That's what most people who buy this stuff are really looking for, right? There are people like me who actually want to use all this. And I think that's going to expand. I think more and more people are going to be that way. But I think it's a slow process. And a good way to get off zero is just to buy some ETF funds, get in there and start. I would love it if most people would, buy hardware wallets, do self-storage, do decentralized finance. I mean, I think that's the way. And I think ultimately we're going to see more and more of that over time because it's so good. It's so much better than the bank. Decentralized finance is open 24 hours a day, 7 days a week, no matter what. The banks are open like 6 hours a day, 7 hours a day, and not on weekends. It's insane, man. If I want to send certain amounts of money from my bank, it can take across to another country. It can take weeks, potentially, certainly 5 days. If I want to send money from my bank just to my mother, it can take time. It's still in the same country, depending on how I send it, and depending on which bank I have. Some stuff is quick now, some stuff isn't. But also, the bank has to agree to let me do it, which they don't always do. The banks are sometimes like, "What is this for?" And we don't, is this okay? And many people have stories of the banks not letting them make transfers that they want to make. Sometimes the banks have saved people, of course, and that's why they do it, because they're worried about scams, and there's value there. But also, there's a loss of autonomy, and so for people who are sure and comfortable with managing their own money, this is an incredible innovation, which allows you to fully control your money. Instead of, if you have $2 million in the bank and you decide you need it for something, you have to hope they pay you. You have to hope they give it to you, right? And they usually do, but it's not a guarantee. It's not 100%. When you store it yourself, when you have full control over it, then it's a guarantee because you already have it. And so I think people will get more involved in that, more interested in that. But it's a slow process. And as I said, the technology is still kind of intimidating. I'm sure we'll have easier to use stuff, better user interfaces, better hardware wallets, all that stuff as we go. And so it'll be easier. Like the Appleification of this stuff hasn't happened yet. And I think when that happens, it's going to be a big deal. And people are going to get really excited about it, much more so than they are now.
Okay, so I have a couple questions about that. One is, let's say if you want to send your mom $500, and if you send it via a stable coin, you send it the crypto route, it can get to her how quickly?
In seconds.
Wow. Okay, so it gets to her in seconds, but doesn't she need to then transfer it to a bank to get that in usable cash? Like what's the next stage for her?
It really depends on where she is and what kinds of things she needs to do with that asset, right? If we're talking about getting cash so you can pay your mortgage, then yes, you're right. Most landlords are not taking crypto yet. Some are, by the way, but a lot aren't, certainly. Also, there are now more and more people who will accept crypto and give you cash directly for it. So if I send her $500, she really might know someone at this point who's like, sure, send me that $500 in stablecoin and I'll give you $500 in $100 bills. But mostly you're right. It's yes, you would have to then send it to her bank, which would then take your typical 2 days or 1 day to ACH it there. And then it would go through the banking system that way. Yes, that's true.
Okay. And my other question around this was, with Bitcoin, do you know how many Bitcoins have been lost? How many have just seemed to be gone from circulation because people have lost their passcodes, or they've died and not sort of shared with someone else that they had Bitcoin, or that type of thing?
No one really knows the answer to that question. There's speculation that it's anywhere between 1 and 4 million BTC. Now, this is important because there's only 21 million BTC that can ever be created. So if it's 4 million, that's a really big deal compared to 1 million. 1 million is obviously a lot too. That's almost 5% of the entire supply. No one really knows because a lot of people, got it early on, and then it wasn't worth anything at that point, or messed up with their hardware wallet, or other things happened, and they threw out their computers or whatever they did, and it just got lost, and it was done forever, basically. So that certainly has happened a bunch, but it's unclear exactly how much. I think a conservative guess of 1 million is probably reasonable.
Okay, so on the conservative side, 5% of all Bitcoins have been lost.
Sure.
On the sort of other side, maybe up to 20% have been lost.
Okay.
So that seems like it's a pretty significant leakage rate or loss rate for people who do, go the self-storage route. So perhaps the self-storage route really is only for very specific individuals, because I mean, if you were going to a bank and they were like, look, there's a 5 to 20% chance you're going to lose this forever because you forget your password or you lose it or you get donked on the head. I mean, I think a lot of people would be kind of very concerned about that.
Yeah. Yeah. For sure, you're right that it's only for people who want that responsibility and welcome that responsibility. But it is important to note that most of the vast majority of the Bitcoin that was lost early on when it didn't have any value. And it was easy to have a lot of it. It was easy to have 100,000 Bitcoin because they were worth less than a penny each. You spent like $600, you got $100,000, you got 100,000 Bitcoin, and then you lost it, and who cares? Like, it sucks, but who cares, right? And that would be a tenth of the amount that's like 0.5% of the whole supply now, right? But like that kind of thing happened back then. So I think the majority of it was lost back in the day. Now people will be much more careful with their Bitcoin because it is worth so much, and they're aware of its extreme upside because they've seen it happen, right? But still, even now to this day, people do lose it. You are correct. And it's not for everyone. Self-storage is definitely not for everyone. And the ETFs are great that way. And soon there'll be banking opportunities where the banks will hold your crypto for you happily, just like they hold your dollars for you. And, they'll lend it out, but not give you any money for it. It'll be great. It'll just the way banks normally operate. It'll be the same thing.
Yeah. All right, so you made a big decision earlier this year, about 6 months ago now, to move to Puerto Rico because there's some real tax advantages to doing that. If this crypto takes off even further from what it already has, and there's this huge capital appreciation, there's advantages to being in Puerto Rico. What are those advantages for somebody who's a crypto investor?
I mean, it's basically if you hold assets that go up in value a lot once you've moved here, you essentially don't pay any taxes on the appreciation after you've arrived and become a resident. You do pay some things for sure. Like it's not cheap necessarily, but comparatively, it's a great deal. It's so much less than you would otherwise pay if things go up a lot. It's a really extraordinarily cheap. So that's the biggest thing. Yeah.
So let's say your regular capital gains tax that you're, going to have to pay on the mainland. What is that? What are we comparing this to?
Well, rather than think of it that way, let's put it this way. Let's say whatever my portfolio is, let's just come up with a number that it's worth right now and what it's going to be worth. So let's pretend it's worth $1 million right now. Okay. And it's going to be worth $3 million. Okay. So cool.
Sure.
So if I decide to sell that much of it, right, $3 million worth, and it was worth $1 million before. So that's $2 million in profit. So if I stayed in the United States, I would have two different tax bills, right? I have my federal tax bill and my state tax bill. Some states do not charge taxes on this, but the state I was living in, Washington, had just decided to start doing it, which is what led me to all of this, because they now take, I think it's 7%, 6%, something like that. So, and then the US government basically takes 23.8% themselves. So if you're talking about, let's just say again, $2 million is profit, and I sold that much in a year, I'd basically be giving out about 30% of that money to, if I was living in Washington anyway, Washington and the US government. So, that's like $700,000. Maybe it's 600 and change. And if I'm in Puerto Rico, I pay nothing for that, and instead of paying that $600, I do have to make a donation to a nonprofit here every year, and it's up to at least $5,000. I have to pay the government another $5,000, so it's like 10 grand to like, it's really like 15 actually, like 15 grand a year to sort of just be here and be eligible for this. But after that, that's kind of it. So, and you also have to buy property after 2 years, so you have to buy a place to live. But if you're saving $600,000, and that's just one, those are sort of made up numbers, not necessarily my numbers. It might be worth it. That's pretty good. You get to save 600K. It starts to become compelling. And if the numbers are bigger than that, if your portfolio is larger than $3 million or $2 million worth of profit, those numbers get a lot more compelling pretty quickly, right? If you're looking at $8 million worth of profit, now we're talking, what are we talking about here? We're talking like $2 million you're saving or so, right? Even a little more. So like, it's compelling.
Yeah. And so from a lifestyle point of view, what have been the pros and cons of moving to Puerto Rico for you?
The pros are the lack of winter cold, which I really despise. And it's really nice not to have that at all. That is the most obvious pro for me. I love that so much. So I decided to move here, and I didn't know anybody, and I don't speak Spanish. And I've only been here once before, and it was a long time ago. So it was sort of a weird, quick decision, but I decided, I think crypto's going up, so I want to jump on this. So I did. So I would say the most challenging stuff here is there's some cultural differences that I did not expect. They don't really do dishwashers in Puerto Rico. It's really surprising to me. There is just a general like slower way of life / infrastructure, not as well built. Everyone's sort of used to things taking a long time in Puerto Rico, which is not exactly what I was used to on the mainland. I was used to like snappier, sharper things. I would say the other obvious challenge besides the roaches, which sometimes show up and I have to call the exterminator, is just like not knowing anyone is challenging. It's hard to move to a place and really not know anyone at all, and not speak the language very well at all. And so it's not easy to just go out and like do activities and meet people and make friends. It's very challenging if you only speak English, which I mostly do. I am learning Spanish. I put time in, but I've got a really long way to go before I'm comfortable having even a short conversation with someone who is fluent in Spanish and not in English. It's going to take quite a while to do that well, not surprisingly. So that's really challenging, and something that you have to be built a particular way, I think, because I moved here by myself too. I didn't like bring family with me either. So I'm really by myself, and I don't mind that, but I think a lot of people would.
What are the qualities that you have that make it sort of doable to move to a new place altogether without friends, without sort of a pre-existing network? What are the qualities that you have that make that doable? And what would you say to what are the qualities that you think make that very difficult and that you'd caution someone to not make the move if they have those qualities?
You have to like being alone, I think. I like spending time with people, but I also really enjoy just hanging out in my apartment by myself. Like I absolutely have a good time doing that. So that feels like really important if you're going to be in my situation, at least. Also, maybe being a little bit of a sociopath helps. Like you have to. I really value human interaction, but also, I don't know, like I feel like sometimes a little removed from it. And so that may help me a little bit too in this case where I'm like, yes, I think about things and it's fine that way, Beyond that, I don't know what other qualities. I mean, it's people were telling me how brave I was to move here when I was saying I was moving and I was living in the West Coast. And I didn't feel brave at all. I guess I understand it more now that I'm here. Why they said that, because it is harder than I thought it was going to be. But it didn't feel like a brave or a courageous move. It just felt like, oh, there's clear incentives for me to move. If I'm ever going to do it, this is the time. Like, I just found out about it. I think we're moving into this big crypto bull market. This is exactly the time I have to get on this as soon as possible. Like, they're paying me. Basically, I'm getting like a very well high paying job to move out here. Like, okay, I'll do that and worry about it later, so.
Okay. And you're still, you're living out there, your residence is out there, but you are allowed to travel. And you just recently completed a trip back to Washington State. So how does that factor into your lifestyle plans, let's say?
Yeah. It's a really nice backup plan for me that I don't have to spend that much time here. Like, I have to spend one more day in Puerto Rico than I do on the mainland of the US every year. But I can travel internationally as much as I want. So, I mean, my friends are all on the mainland pretty much. No offense, Sean, who's in New Zealand. But even if I could do like 6 months there and 6 months here, like I can totally do that. Spend the winter here basically and spend the not winter hanging out with friends and hurricane season over there, which is coming up soon. So I hope to sort of build a really fun, exciting life here with like a full life full of community and all that. But if not, I can do this for a few years and take advantage of these incentives and then figure it out and decide if I want to stay or not. And while I'm basically living here half time, and I think that'll be no problem for me to do. I think I'm built for that. Hopefully, I'm right.
Okay, finally.
Yeah.
Yeah. Finally, what are your thoughts on the current state of crypto regulation and the political situation where we've got this big presidential election coming up in the US? Where do you stand on how that might affect crypto?
Well, if Trump wins, it's going to be good for crypto, most likely. He has really sort of taken on the mantle of being the pro-crypto candidate. The Biden administration was clearly anti-crypto, strongly anti-crypto. I don't really know why. It seemed like a big mistake to me from a political point of view, from a fundraising point of view, from lots of points of view. I didn't really get what that was about. JD Vance, Trump's VP pick, is the most pro blockchain, I think, guy in all of the Senate, like very insanely pro blockchain. So that's got to be good for crypto regulation stuff if they win. But I think even if Kamala Harris wins, who is almost certainly now going to be the Democratic nominee, she seems to have taken a softer stance towards crypto also, even the last few days. So it seems to me like this is good either way, and that everyone's sort of wising up on both sides that it's not really a great idea to make very wealthy people your enemy when you could make them your friends. And it doesn't really cost you anything to do this. I guess it costs you the banking lobby. Maybe that's why the Democrats weren't so interested in it, is it cost them their banking special interests if they were to do it. But I think ultimately that stuff is all going to combine anyway. The banks are going to be pro-crypto eventually because that's the only choice they're going to have. Right now, they're still, I think, trying to keep it slow, as slow as possible. And they've done a good job slowing it down for sure. Like the Bitcoin ETF should have happened years ago. The Ethereum ETF should have happened years ago. But we're here, and it's really hard to put the genie back in the bottle at this point too. Now that these ETFs have happened, who can say Ethereum is a criminal enterprise now that they've okayed and there's ETFs happening? It's like another thing, that you can invest in. It's fine.
Okay, so now that you're 6 months into your Puerto Rican adventure, and you've gone there anticipating a kind of real acceleration in the crypto market, is that still on track, your vision for that? You still see crypto heading upwards and fairly dramatically in the near to medium future?
I didn't catch that question. You froze there. Can you ask it again?
Okay, so you're 6 months into your Puerto Rican adventure, moving there, anticipating a major acceleration in the crypto market. Is that something that's still on track? Do you still foresee that happening?
Yes, I do. I think it's absolutely on track. Bitcoin's at about 66,000. In February, when I filed for residency, it was at 51,000. That's like almost a 30% increase in 5 months. Feels pretty good. Ethereum, similarly, I think was around $2,000 at that point. It's like $3,600 now. These ETFs just launched. I can't imagine a scenario where Ethereum doesn't go up in price over the next few months as these ETFs start to buy up some of the supply of it. If those ETFs didn't exist, Ethereum was at 3,600. With them existing, how could that not be good for the price of Ethereum? I can't really imagine how it couldn't be. The halving is supposed to start to affect the price of Bitcoin in about 3 or 4 months. Generally, historically, that's when we really start to see the price of Bitcoin and then the whole crypto market move. Hopefully that's going to be the case again. I guess we're going to find out, but I moved here betting on that, and I feel really good about it so far. I would have taken, if you told me these were the prices a year ago, I would have been like, yes, accept. I will take that. That sounds amazing. It sounds like we're well on our way to new all-time highs, and it's all very exciting. Bitcoin's already hit a new all-time high this cycle, and is not that far off from it even now as we speak, right? So I think we're just getting started. Just like if you look at the price chart of Bitcoin or the overall crypto market cap, it is just like every 4 years, it just right about now is when it starts to creep upward, and then suddenly it hockey sticks. And we don't have a huge sample size on that, so it's possible that it's not going to be the same this time. But I am betting that it is once again going to go that way, and that there's a lot more people who are going to get excited about crypto in the very near future.
All right, thanks for that, Jonathan. Until next time.